Everyone, we are here with Stefano Marani again, and it's awesome to have him here as always to just get an update on Renergen and just make the complexities a bit more simplistic. So we'll look at three main topics today, namely the gas strike that they found, funding, and then also timelines. So stick till the end. We hope you get a lot of value. So Stefano, welcome. And just with regards to the gas strike, there was a SENS announcement about a new gas strike. Can you just tell us a bit more about it and what it means for Renergen?
Yes, and firstly, let me say, always a pleasure being here and speaking to everyone. I relish these opportunities. So, from a gas strike perspective, I think what's important to note is that where we're drilling in the field right now, we're not necessarily drilling in a part of the field that's going to increase reserves and resources. But what we are doing is that we are bringing on the additional gas flow to the phase one project to bring it up to full capacity. The other encouraging thing is that obviously, we've inferred these reserves, and what's critical over here is that every single time that we drill and we strike and we bring more gas online, it's just showing that all of the assumptions that we've made and all of the reserves and the analysis that's been done is actually accurate and it's holding up to scrutiny. So from that perspective, yeah, this is very encouraging. It's the strike rates are above our initial expectations, and so it's going well. And of course, the naming convention seems to be attracting a lot of attention, and we got a couple more surprises. It's not all Lord of the Rings and Star Wars, but you'll have to wait until the next few strikes.
Okay, cool. So just quickly touching on helium again. We interviewed Keith McLaughlin earlier, and he spoke about helium or LNG being part of benefiting from higher gas prices or oil prices. Can you just maybe touch on that a bit about how that entire system works and how Renergen or the future of Renergen also benefits from higher commodity prices?
Yeah, so the two separate commodities. I'll touch on LNG first. LNG is part of a much broader macro theme. So obviously, since the conflict in Europe began, a lot of the fight has been around, well, at least a lot of the rhetoric and a lot of the market movement has been around the fact that Russia is a massive supplier of natural gas, which LNG is simply liquefied natural gas. And people are looking to diversify away from Russian LNG. Now, that means that if you're going to diversify away from that and you're not buying that, then there's a short supply in the system. Already without the conflict, there was predicted to be a short supply in the system. So this has exacerbated that. And as a result, natural gas prices are incredibly high. Now, because it's summer, not as much gas is being consumed, but one needs to consider the fact that winter is only a few months away. As Jon Snow says, winter is coming. And the fact is that unless they manage to find a viable alternative, there isn't going to be a situation in which all of a sudden everyone is buddies with Russia again. So the situation that we had last winter is just simply going to come around again. And that means that there's going to be a desperate short supply of LNG in Europe. And you're not going to replace LNG with any other energy source anytime soon. Renewables aren't going to fit the bill because you need battery storage, and battery storage isn't there. And even if you do switch from gas to electricity, every single household then has to switch out from gas. So LNG is here to stay, whether we like it or not. And the fact is that right now there's a desperate short supply. So I think energy prices in that regard are going to be high for a very, very long time. And I'm talking years. Even domestically on the South African front, it's had an impact on our side because the Mozambican gas, the Panda and Tamane fields are running dry. And that means that we've somehow got to figure out a way to land LNG in South Africa. How we get that right, I don't know. There's too many challenges around it. But assuming that someone does manage to figure it out, that still then needs to be shipped around the country. And that in and of itself means that the Sasol pipeline gas has to increase significantly from its current rates. So natural gas prices are going to be up and going to be elevated for a long period of time, which for that part of our business spells really good things because we're a producer of natural gas. On the helium side, it's the law of unintended consequences. The BLM went down. The BLM, for those of you that don't know, it's the strategic reserve in Amarillo in Texas, built by the US government. The BLM went down. That is about 15% of world supply. Then you had the fire in Kansas. And then you had the Russian Amur plant go down. Irkutsk was also coming up with supply out of Russia. That's been embargoed. And then because of the natural gas crisis in Europe, Algeria has bypassed a large portion of its liquefiers. So Algerian helium has now also been switched off because you can't produce helium without running the gas through the LNG liquefiers. So you take all of that into account, and then Qatar's delay, you take all of that into account. Helium supply is below 50% of where it was same time last year, and last year it was already in crisis. So yeah, Keith is right. We've had some spectacular tailwinds, and these are systemic changes in both of these two commodities. So we've seen bulk helium prices being auctioned from $2,500 to $3,500 US per MCF, where a year ago spot prices were around $800. And then on the LNG prices, as I said, they're a lot higher. When we started this project, our first invoice for natural gas was around 130, 135 Rand a gigajoule. I think our current invoicing is over 400 Rand a gigajoule.
Okay, that definitely shows something. So, obviously there is a demand for this, and you are ramping up the supply as you build all of these, and we'll touch on the funding now, but just regarding timelines, commercialization, what kind of timelines can you provide some clarity on?
So phase one, I think everyone is aware of the fact that it's imminent. So I don't want to jinx anything, but watch the space. So aside from turn on of phase one, phase two, we're looking at by first quarter of next year, having everything wrapped up from an FID perspective or a financial investment decision perspective, all of the funding, equity, everything tied up, and then going into construction then as well, which then sees us turning on the taps to the phase two project, the mega project, in calendar year 2025. And then that'll take about 6 to 9 months to ramp up into full scale production, at which point then it's a mega project.
Okay, cool. And with regards to funding, obviously this is not a cheap development and a lot of construction going on. So we all know that there's a lot of funding needed and required. So obviously there's been various announcements regarding funding. Could you just give us an update and some clarity on what's happening with all of the funding aspects?
So you would have seen the announcement relating to the DFC. The DFC are obviously the United States Development Finance Corporation. That is the equivalent of South Africa's IDC. The DFC funded the first phase project, and they gave us $40 million on the basis that it was a helium project and that it was a proof of concept that we needed to bring online. Now that we've made the progress that we have, the view was, well, look, we've seen what phase two looks like. Here's a $500 million debt package for phase two, subject to completion of the due diligence. And it's not a new loan, remember. This is a modification of an existing loan, which means that we're not going through the whole process again from the beginning. We're not, renegotiating documentation. This is tweaking on the edges. And the tweaking on the edges that we're doing is they want to come out, they want to see the first phase in operation, they want to see that the plant was built, that we can separate the helium and the LNG, and then we can deliver these to our customers, and then we can operate properly. And then, that combined with a few other little governance issues, and from a due diligence perspective, and that's pretty much the funding package. We've had 5 banks come to the table with debt over and above what the DFC are offering. Their cumulative amount adds up to about $750 million. So we only need 750 million of debt for the phase 2 project. So we'll take 500 from the DFC and 250 from the other 5 lenders. But that gives us negotiating power because we've got more lenders at the table than we need debt for, which means that we can sculpt our terms. And that puts us in an incredibly strong position. So that's, we're pretty confident where we are now that given the tailwinds that we've had from a macro perspective, lack of energy, it's very, very topical. And the helium crisis, all of this is just bolstering the business case for people to bring this online. Now, fortunately, we stand in the beneficial position that globally, if you look at the merry-go-round, this is the next major helium project out there. It's the furthest along. So for a strategic commodity, which is instrumental in so many aspects of global life today, if the world wants the helium, this project must get funded next.
Very interesting. I know one of the funding mechanisms was the Argonon token. I actually bought a bit of that. Is there any update on that? And is there any long-term plans of integrating that Argonon with Renergen, creating the spot price for helium or anything like that?
Yeah, so the token is now out there. The token is tradable. We're increasing the number of exchanges that it can trade on. It was unfortunate that at the time that the Argy listed, it was, I think Bitcoin halved, and so did Ethereum, and some lost as much as 75%. But the fact is that the token is out there, and as time progresses and as we come close to being able to deliver liquid helium through that mechanism, our view is that you will actually see the token ultimately end up trading at a premium to the spot price. And the reason for this is quite simple. Assume that you have a bar of gold. You have to keep it safe. That means that you've got to put it in a vault, and therefore there are associated storage costs with the gold. Which means that the forward price will never be as much as the spot price, because the forward price has to factor in the storage. Helium is quite different. The storage cost of helium is insane because you're keeping it at minus 269 degrees Celsius. Whereas Renergen is keeping it underground until you take delivery. And there's no storage costs associated with keeping it underground. And so if you're a trader in helium or you're the end customer, it becomes significantly more attractive to own the token. And then you cash in the token when you need the helium. And so we see a situation where ultimately, once the helium is flowing, the Argies are actually likely to trade at a premium relative to the underlying spot market. And so we see this pull to par.
Okay, very interesting. Yeah, thanks for that update and information. It's always extremely valuable to get it straight from the CEOs and learn more about the company. So thanks so much, Stefano, and we'll keep on keeping a close eye on Renergen, and good luck with all of the developments.
Thank you, and same to you. Really appreciate the time.
Cheers.